Welcome to the StockMatter.com studios here in the Black Hills of South Dakota. I'm your StockMatter Brian Johnson. I'm making professional trading simple. And another just sideways day. Here you are. We're in this trading range. We're moving sideways as we have the last 3 weeks, almost a month now of basically sideways motion. On the Dow Daily, you can see the little teeny tiny doji we put in today. Um, And let's just go ahead and just so you can even see that there actually was a candle put in today, I'll zoom it in. See? Wow, look, there really was a candle today. Pathetic move of about 80 points top to bottom. So we're still waiting for a major move. Now I can have a couple choices. I can go ahead and just, give you the truth about it all and make it a quick video, or I can go on and on about something that is just more or less going to be made up, and it's not even worth insulting your intelligence over. So instead of trying to pretend like there's some secret formula to what's about to happen next, I'm just going to do what I do, and that shoots you straight. I'm really just all about honesty, and to be honest, we're just stuck sideways. Same stuff, different day. You can see it on the NDX here on the 60 minute. We're not going anywhere here. We are still following somewhat these areas of support and resistance, but the moves are so small and so slight that to play the indices at this point is all but impossible. The NDX did have a little dive here towards the end of the day, which put it right back down here into support. But at 1783.65, it's basically right at and on the 20-day moving average. Um, if we're still waiting for a break below this area, now that would not be a bad defensible short if we can get some sort of movement to the downside on the Nasdaq. Beans where it's at right now, but it's all chop. I mean, 5 days. If you look at the closes of the last 5 days, it's been within what, 20 points. 5 days, and the closes have been within about 20 points in a 20-point range. Very hard to trade the indices. From a weekly standpoint, it's Monday. Not going to worry about that. Never do on a Monday. SPX on a 60. Here you can see it right back to a support area. But kind of started the day here and then moved back down into support. But overall, the whole day's move was another 10-point move. We've talked about these before. All but impossible to really make any money in this type of market. Still within the larger channel and within the trading range we've been watching, and we will continue to watch. From a weekly standpoint, now this is actually kind of more interesting to me. Just this look here. Obviously, it's Monday, but just this look here looks like it's just kind of fading slightly up to sideways here for the time being, but certainly, so you know what? Certainly still in a high base formation though, which is still a bullish look. Still Monday, won't worry about the weeklies though. Fix on a daily, moving sideways once again. It was up a little bit today, but this is a drop in the bucket compared to what we've seen with these highs over here. Just still no fear in the market whatsoever. I really think, here's a small little daily or weekly on the VIX. Really, people are just looking to Christmas, I think, right now. Maybe we get a major move, or not a major move, but maybe we get some sort of movement this week. I would expect a little bit more movement next week as we come into an options expiration week. But certainly started out the week very, very calmly today. Apple on a 60-minute cannot find its footing. It's just fallen apart. And I've mentioned this has shown relative weakness compared to everything else. I mean, the Nasdaq was basically, it was down 5, basically break even on the day. And look at Apple fall apart. Down 4, 2.26% compared to the markets. It's in bad shape. So if you're long Apple, maybe we're going to get a bounce here because it is right back to support. There's a heavy, heavy support line down here too. If you're not short Apple already, probably a little late to get in. You want to be very careful if you're looking for a longer term move. I did mention short below here, and it was a great, a great opportunity here to play this to the short side, right down here into this 187, 188 area. That's where I'd be looking for a bounce. Otherwise, it's 187.50 and then below that 182.50. But you can see Apple just cannot find its footing, which is very strange. Look at the volume coming in on Apple as well on these moves to the downside, and coming into Christmas nonetheless. So with all the talk of the iPods and the iMacs and oh, Apple's gonna knock it out of the park because they have all these new products out. A lot of that may have already been built into the price when it reached 208. So be careful. Be careful with your Apple. You can see at the beginning of the week, and we are breaking this heavy support area. Monday, we'll see where it closes by the end of the week. It would be surprising to just blow through this, but if it does, 184 would be, of course, the most logical place to see a bounce if it continues to break down. ABT on a 60-minute, moving sideways as well, but outside of this range we're watching, still looking for a break below 20-day or the 53 mark to get short. AIRM, waiting for it to maybe make a break upwards here. Once again, if the markets move up, this is one to be watching. If they move down, look at the previous. CSX on a 60-minute as well was not able to stay above 50. I said if it can just stay above 50, this would be a good defensible long play, but not able to do it today. So continue to watch this going forward. Maybe it bounces off the 20 and comes back up. Otherwise, below this area here is a very good short. That would show a lot of weakness if CSX starts to fall back below these levels here. DIG on a 60-minute, you can see it going sideways. It was down 9 cents today. It came back up, tried to retest this upper resistance area and was not able to get above it and hold. So your next entry, this is still in the middle of stuff though, so if you didn't catch a short entry back up here at this overhead resistance, then your next entry to get short would be below here. If you're going to get long, it's got to break up and over this triangle before you take DIG long. I'd be very careful of that. EMR did not break to the upside today, however, still hanging up nicely to this upper channel line. Waiting for a break of it, and then more conservative over 43 for a long on EMR. FAS on a 60-minute, you can see it crashing as well today, down 3.94%, well ahead of the markets. This is another good one, below 75 or below 74. I called for a short on this one over the weekend. If you guys were able to catch that, it did reach almost as high as 76, so you got some entries to take it short, especially below that 74 area. Was a really good trade. Hopefully some of you got to jump in on that. Mark, if you're listening, that's you. FAZ on a 60-minute, coming back up and above. Now look how it stopped right at the 200-period moving average. If it gets up and over $20.50, I'd be careful of it at $20.75, but would still make a pretty defensible long if it can get up and over $20.50, but only back to about 21. And I'd be very cautious about holding it at that point. From a daily standpoint, we're still stuck in this triangle, waiting for a break one way or the other to really get seriously long or short FAZ. And that does it. That will wrap it up for today's video. Short and sweet because there's nothing to talk about. Markets were just sideways all day long. So on to the subscribers vid. Talk about the Russells and some of the other stuff happening within the markets. But guys, just keep watching these trading ranges. There really isn't anything else we can do. The markets are going to do what they want to do. It's been very, very difficult to make money the last month. So if you're relying on this for your sole income, or you're hoping to make $1 billion before Christmas so you can buy presents for your kids, it might not happen. We have to resign ourselves to the fact that it's sideways as of right now and continues its sideways motion as we near Christmas. So regardless, guys, use this time to your advantage. Spend it getting stuff done at work, or spend it getting stuff done at home, or getting Christmas presents bought. There just isn't a whole lot of trading to be done, and you're better off not trying to jump into this on the indices side. Now, there are some equities that are moving pretty well, so I would turn your attention to the equities. Start looking at stocks and looking for good setups and looking for stuff to play there. That is where you're going to make money, if you're going to make any money at all. So protect your money overall. It is your money, and nobody cares more about it than you do. I'll be back with you again tomorrow night. Bye.